Welcome back, everybody, for another deep dive.
Hmm.
Today, we're going to be tackling a topic that feels, I don't know how to even describe it, timely, relevant, always important: wealth and income inequality.
Yeah, definitely a big one.
Yeah.
And the sources you sent over are really interesting. We've got excerpts from Piketty's Capital in the 21st Century, which I know has been super influential, and then a Chinese text that kind of analyzes Piketty's work from a different perspective. So,
Yeah, it should be really fascinating to kind of see the different angles on this. So, to get us started, one of the first things that jumped out at me from Piketty's book was this idea of a U-shaped curve when it comes to income inequality in the 20th century.
oh yeah,
He focuses mainly on Western nations, and he points out that inequality actually decreased pretty dramatically between World War I and like the mid-20th century around 1950,
right.
but then it starts to rise again. So what's going on there?
It's kind of a surprising trend at first glance,
Hmm.
but Piketty argues that those huge disruptions like World War I, the Great Depression, they
Mm.
basically hit the reset button on wealth accumulation, at least for a while. Okay, think about it. Wars destroy capital. The Depression wipes out fortunes.
Yeah.
And then on top of that, you've got governments imposing high taxes to fund war efforts.
Right.
And since the wealthiest people held the most capital, they were hit the hardest proportionally.
So it wasn't that everyone suddenly became more equal. It's that the wealthier folks lost a bigger chunk of what they had.
Exactly. It compressed the wealth gap.
Uh,
But as things started to stabilize, the conditions for accumulating wealth returned.
and so did inequality.
Exactly.
So if these like system shocks are only temporary fixes, what are the forces that keep driving wealth concentration in the first place?
Mhm.
Piketty talks about two fundamental laws of capitalism. I think we need to unpack those.
Yeah, he keeps it pretty simple, actually. Imagine you've got a society where most of the economy is made up of capital, things like real estate or stocks, even intellectual property.
Okay.
Piketty's first law basically says the more capital you have dominating the economy, the bigger the share of national income goes to the people who own that capital.
So even if everyone's income is going up, if capital is growing faster, the gap between the rich and the poor is still getting wider.
Yeah, exactly. Now, the second law adds a bit more nuance. It connects that ratio of capital to income with the overall growth of the economy.
Okay.
Basically, if the economy is booming, those big fortunes have less of an overall impact on inequality. It's like diluting a strong drink with more water.
I like that analogy.
Yeah, it kind of helps visualize it.
Okay, so that makes sense. But then there's this idea that seems super simple when you first hear it, but I have a feeling it's actually really profound. It's this idea that RG.
Oh, yeah, that's a big one.
It sounds like a math equation, but it feels like it's about way more than that.
Definitely. So R represents the average rate of return on capital. Think of it like how much your investments are growing every year.
Yeah.
And G is the economic growth rate, how fast the whole pie is expanding,
Okay.
when R is consistently higher than G, which has often been the case historically.
Ah.
It means inherited wealth is growing faster than earned income.
So even if you're working hard and saving and doing all the quote unquote right things, someone who inherited $1 million is seeing their wealth multiply faster just because they own stuff.
And that creates this snowball effect across generations where the gap between the haves and have-nots just keeps getting wider.
Mm-hmm.
Piketty uses a lot of historical data, especially from France, to show how this dynamic has played out over centuries.
Yeah.
It's like this picture he paints of a world where the wealthy, even if they aren't working, are getting richer faster than everyone else, just by virtue of owning things.
Makes you wonder if we're all just running on a treadmill trying to catch up to people who started the race miles ahead.
Right. Is this just the natural order of things in a capitalist system?
Yeah, or are we all just stuck?
Well, that's where things get really interesting and where Piketty's work challenges some of our basic assumptions. He's not saying capitalism is inherently evil,
Mm-hmm.
but he is asking us to think critically about how wealth accumulates and whether we want to just accept this level of inequality as inevitable.
Right. It's not about demonizing the system. It's about understanding it and then deciding what we want to do about it.
Exactly. It's not just about how much wealth there is. It's also about how it's passed down through generations, inheritances.
Right.
Piketty looked at historical records and he found something kind of surprising. Inheritances actually plummeted in the 20th century.
Really? I would have thought that with all those shocks to the system, like the wars and the depression, that inheritances would have at least stayed steady.
You'd think so,
Yeah.
but they actually fell even more dramatically than overall private wealth.
Wow.
Piketty points to a bunch of factors that came together. The destruction of capital during the wars, smaller families, meaning fewer heirs to split the wealth, and policies like progressive taxation that helped redistribute wealth.
So for a while, it seemed like inherited fortunes were becoming a thing of the past.
Exactly. Like
Yep.
that whole idea of the self-made man really took off.
Right. We think about entrepreneurs, tech billionaires, people building empires from nothing.
Yeah, but here's the twist.
Yeah.
Piketty's data shows that inheritance is making a comeback.
Interesting.
Now, you might be thinking, okay, but wealth today is different, right?
Right.
It's more about what you earn, not what your family gives you.
Yeah.
And that's a valid point. But even with all these self-made fortunes, Piketty says the underlying dynamic hasn't really changed. Remember RG?
Mm-hmm.
Over time, that power of inherited wealth can actually outpace even the most impressive entrepreneurial success stories.
So you're saying even if you work your butt off and build something amazing from scratch, someone who inherited a bunch of money is still likely to end up wealthier than you in the long run.
It's like trying to outrun a headwind. You can make progress, but it's always an uphill battle.
So are we headed back to a world like in those old novels where your family name and your inheritance determine your entire destiny, like a new aristocracy?
Piketty doesn't make any firm predictions, but he does explore some unsettling possibilities.
Like,
One scenario is the rise of what he calls patrimonial capitalism, where inherited wealth becomes the defining feature of the economy. Imagine a society where your access to the best education, the best jobs, even your social status is largely determined by what you inherit, not your talent or your hard work.
it's almost like a return to feudalism, just with stocks and investments instead of land.
Exactly. And that raises some serious questions about social mobility and equal opportunity. If the starting line keeps getting moved further and further back for people who don't inherit wealth, what does that mean for the American dream? Or any dream of a fair and just society?
So let's say we accept Piketty's analysis, this idea of RG, wealth concentration, the potential return of patrimonial capitalism. What can we actually do about it? Is there any way to break this cycle?
That's the million-dollar question.
Yeah.
Literally. And it's one that causes a lot of debate. Piketty himself is a big proponent of a global progressive tax on capital.
A global tax. That sounds incredibly ambitious, almost impossible. How would that even work?
Yeah, it would be a huge undertaking, no question. But Piketty argues that it's necessary to counteract those inherent forces of wealth concentration.
Oh, okay.
He thinks this kind of global tax could help redistribute wealth, fund essential public services, and create a more level playing field for everyone.
It's a bold solution, but I can already hear the critics.
Yeah.
Wouldn't a wealth tax discourage investment? Wouldn't it stifle economic growth?
That's a common argument.
Yes.
It comes from people who think the best way to address inequality is to focus on growing the overall pie and then assuming the benefits will trickle down to everyone.
It's that classic debate, redistribution through taxation versus just focusing on economic growth.
Exactly. And it sounds like the Chinese text we have offers a slightly different perspective on this.
Okay, so what's their take?
Well, they definitely agree that inequality is a problem that needs to be addressed, but they seem a lot more skeptical of Piketty's solutions, especially that global tax idea.
Yep.
They point to China's own economic rise and its success in reducing poverty. And they argue that they've achieved this without resorting to such drastic measures.
So they're suggesting there's another path. A path that doesn't necessarily involve radical wealth redistribution.
Right, and it raises a good question. Is Piketty's analysis too Western-centric? Does it apply to countries like China with different economic systems and historical contexts?
It's a fair point. I mean, a lot of his data is from European countries.
Yeah, but even so, Piketty argues that those fundamental dynamics of RG can operate in any capitalist system. The details might differ, but the basic principle is the same. When returns on capital outpace economic growth, it creates conditions where inequality can thrive.
So we've got this tension between global trends and local contexts, and no easy answers. It's complicated.
It is. But both of these sources highlight something really important: the role of human agency in all of this. We're not just passive passengers on this economic roller coaster.
You mean we're not just stuck with whatever happens?
Exactly. We have choices to make policies, to implement even individual actions we can take. And that brings us to another area Piketty explores where those choices really matter. Education. I don't think he's talking about whether to get that extra shot of espresso in the library.
Okay, good. To be clear.
He's looking at the whole education system. You know how it can either make inequality worse or help level the playing field.
Right.
He uses Harvard as an example, showing how even in a system that's supposed to be all about meritocracy, inherited wealth still plays a huge role.
Yeah, I've heard that statistic about how the average Harvard student comes from a family in like the top 2% of earners.
It's crazy, right? And while it's definitely possible for someone from a less privileged background to get into Harvard, it's statistically less likely. And Piketty argues that rising tuition costs, especially in the US and the UK, are making this problem even worse.
It's like this cycle where educational advantages turn into higher earning potential, which then gets passed down to the next generation.
Exactly. So even if you manage to climb that ladder yourself, you might be pulling it up after you, making it harder for others to follow.
So even in a so-called meritocracy, wealth still gives you a huge leg up.
And it makes you wonder, is a system that's so heavily influenced by wealth really a meritocracy at all? Is it really about talent and hard work? Or is it more about who can afford the entry ticket?
So what's the alternative? Is Piketty saying we should get rid of private universities or like cap tuition at some ridiculously low level?
No, he's not suggesting anything that drastic. But he does argue for things like more equitable funding models, need-based scholarships,
Mhm.
policies that make higher education accessible to students from all socioeconomic backgrounds.
It sounds like he's talking about investing in human capital, not
Mhm.
just accepting that education is a luxury good for the wealthy.
Right, and it's not just about fairness.
Mm.
It's about making sure everyone has the opportunity to reach their full potential.
I mean, it makes sense, but I can imagine those ideas would face a lot of pushback. There are always people who benefit from the status quo.
Oh, definitely. Change is never easy, and there will always be resistance. But that doesn't mean we shouldn't try to create a more just and equitable system.
Okay, so on that note, both Piketty and the Chinese text touch on the role of government in all of this. What's their take?
Well, there's some interesting differences there. Piketty, writing from a European perspective, where the welfare state is really strong, sees a big role for government in regulating capital and redistributing wealth. He's advocating for things like that global wealth tax, inheritance taxes, investing heavily in public services.
So, a pretty active role for the government,
Yeah, but the Chinese text leans more towards a market-driven approach.
which makes sense given their different historical experiences.
Exactly. China's economic transformation has been driven largely by market forces, while Europe has a much longer tradition of social safety nets and government intervention.
So, different paths, different approaches.
Right. And it highlights the fact that there's no one-size-fits-all solution to these challenges. What works in one context might not work in another. And that's what makes this whole discussion so complex and fascinating.
Yeah, it's a lot to think about. And it sounds like as we move further into the 21st century, we're going to have to grapple with these questions of inequality on a global scale, taking into account all these different experiences and perspectives.
For sure. It's a daunting challenge, but it's also an opportunity to learn from each other, to experiment with different approaches, and maybe, just maybe, to create a world where prosperity is shared more fairly.
I like that. A world with more shared prosperity. That's a goal worth striving for.
Absolutely.
Yeah.
And that's what I find so hopeful about both of these sources. They don't just present a bleak picture of inevitable inequality. They remind us that we have agency, that we can make choices, and that those choices really matter.
So as we wrap up this deep dive, what's the one question you'd like our listeners to walk away with?
It goes back to something we talked about earlier. If RG is this fundamental dynamic of capitalism, is it even possible to have a truly equitable society without fundamentally changing the system itself?
That's a great question, and one that I don't think has an easy answer.
No easy answer, but it's definitely worth thinking about.
Food for thought, indeed. Thanks for joining us on this exploration of wealth and income inequality. It's been a fascinating conversation, and we hope you've learned something new along the way. We'll see you next time for another deep dive.